Welcome back to Switzer on Australia's Business Channel. Sell in May and go away. That's the old saying, but it didn't work out this May. And in fact, a number of sectors did really well. To take a look back at the month that was and to preview the month ahead, we have the Switzer Super Reports genius writer, Paul Rickard. Hi, Paul.
Hi, Peter. Well, look, it didn't not work. The market didn't do a lot in May, but if you add in the... Look, it lost 0.2 of 1%, but you add in dividends, it was up 0.4%, so it didn't quite work in May, right?
Yeah, and there's been some serious sell-offs in May.
There have been a number of down days. It's been a fairly volatile month, so why don't we just have a look at the overall synopsis?
The summary.
A couple of points.
We've got a chart there coming up.
The first chart just shows you what the ASX 200, what it did over the course of the month.
Yeah, there is.
Look, you'll note this is the accumulation index. It's still up 8.9% year to date. So,
love that.
You know, with dividends, people are doing pretty well, and pretty hard to match those sort of returns in most other asset classes. Yeah. But when you boil it down into the actual sort of parts of the market, it tells you a slightly different story. And contrary to what happened in most of 2013 and 2014, the actual top part of the market is actually starting to lag. So the top 20 stocks actually fell by 0.8%, and they're actually behind a little bit over on a year-to-date basis, up 6.7%.
But Paul, they did well for a long time.
They've done so well over 2013, 2014. The mid-cap 50, Peter, which is stocks number 51 to 100, they're the stars, up 13% year to date.
Terrific.
And the small ords, which is stocks number 101 to 300 by market capitalisation, they're having a bit of a recovery. So it's sort of the market, if anything, has become a little bit more of a stock pickers market, I guess, over the last...
I love those figures, Paul, because we actually did tip that. We said it was time for the small companies to come good, and they have come good.
We said that one of the, a lot of those companies are either slightly more cyclical exposed. In other words, they're either consumer discretionary or industrial in nature, not universally. And benefit from a lower Aussie dollar, or at least should benefit from a lower Aussie dollar. I think that's part of what you're seeing. Also, retail sales have been pretty strong. So some of the smaller companies have started to come good after, again, a pretty lean couple of years.
Yeah, bad time. Let's go to the sector analysis now. What sectors did really well? And we've got a chart coming up. What was your overall view on the sectors, Paul?
Well, let's have a look at this chart too. And probably the most important sector to talk about is financials, which of course is almost 40% of the market. So always a good place to start. That's the major banks. Down 1.7% during the month and up 7% year to date. So look, a lot of the banks did recover in the second half of the month. They were down a lot more. Of course, we had three of the majors had half-yearly reports. Commonwealth Bank had a quarterly report, so they are all a bit on the negative side because there was very little revenue growth. And also we've had a few capital raising. You have National Australia Bank with a 2 for 25 rights issue. Westpac come out with a DRP plan that's not it's not going to be neutralised. So financials is probably the most negative sector, down 1.7%.
Look at consumer discretionary, Paul.
And look at consumer discretionary. The other one to draw out is consumer staples, where both Woolworths and Wesfarmers are really doing it tough and Metcash, as we start to see some of the impact of what about the competition from Aldi and others. People are really worried about the margins in the supermarket business. Year-to-date basis, consumer discretionary up 16.5%.
No wonder Jerry Harvey's happy.
Yeah, industrials 15.9%, and utilities are the standout, up 18.1%. So, look, all the sectors in the green is a little unusual. It's quite unusual to have all parts of the market up, and not really that much difference from top to bottom after 5 months.
But Paul, we are playing catch up with most other markets of the world. A lot of them are in all-time high territory, and we aren't. Do you think the main reason for us not being there has been the stubbornly high dollar?
I think that certainly explains 2012, 2013. I think the Aussie dollar at $1.05 to $1.10 US cents was just crazy. And then we fell pretty quickly in the last part of this year and so on. And that's probably, with so many forecasts about it's going to go low. Very hard for an offshore investor to put too much money into the Australian market with so many people saying it's going to 70 cents. So I think that's probably the number one reason. But secondly, we've had a fairly messy political situation, which doesn't matter whether it's been Labor or Liberal Party. I don't think that's really helped as well. So, maybe the Reserve Bank's slow to cut interest rates here. You could argue that in hindsight. So, look, we're still at 5,700 odd-ish, a long way from our high of 6,800. Pretty well every other market in the world has had a go at its high, and we're sort of one of the odd ones out.
Yeah. it all lies ahead. Now, Paul, we've got a viewer question. I think it was from Giselle. And she was worried about the fact that she'd worked with BBY and she had stocks that she'd bought through BBY. She hadn't bought options or anything like that. But she kind of was a bit at a loss about what's happening to her stocks. What advice would you give her?
Well, it's very hard to tell exactly how many people are caught up in the whole BBY fiasco. It seems that there's a lot more than perhaps the meets the eye. The ASX has been a little bit quiet on the issue, I think.
Very. I've been trying to bring them on the show, but they, it's difficult getting them.
Yeah, the administrator had a meeting, I think, last Wednesday or Thursday, put out a press release, did a presentation to potential creditors. Look, there are 2 or 3 categories of people that potentially have some money caught up. The first category, probably the people who will lose, done it the hardest, were the option clients. A lot of those option positions were closed out, and for many cases, they were closed out at a big loss. One of the reasons that happens, Peter, is when you've got options, there's not always, particularly long-dated options, there's not always a huge market in them. So when the ASX through its agencies goes and sells them, basically to close out the position, the buyers run a mile. And that's
why couldn't they be transferred to somebody else?
Well, they did. I think in hindsight they tried to transfer to another clearing broker, but there was a deadline. The deadline changed a couple of times. It got brought in. Eventually, if you hadn't done it by, I think it was Monday the 19th of May at 2 p.m. or whatever the time was, other positions were forcibly closed out. So options people, I think, are going to do it a bit tough. If you've got stock which you had BBY as your CHESS sponsor, you should be okay. Now, most of those positions have been transferred to other sponsoring brokers. But if your stock is still under the control of BBY, look, you shouldn't lose any money there because
in your name those stocks, aren't they?
Yeah, either the administrator will let you transfer it out, or eventually, when you can transfer it out, it will be protected by the National Guarantee Fund. Now, this is a fund that the ASX has. Over $100 million is sitting in the National Guarantee Fund. Never been called on, and one of the things that can be called on is for a situation like this.
Okay.
And then there's a third category, I think, of people who've got some cash accounts. Again, there's various style of those accounts, and I hope in many cases that investors should be clear there. But really, there's more information needed, and I think at the moment I'd be in contact with the administrator, seeing what you can do to take your positions out.
Yeah, that's what the ASX told me today. Contacting the administrator is very important. There's also a number of sort of FAQ, frequently asked questions, on the ASX website. But I think a lot of people are a bit surprised about their option position. But it seems to me, Paul, if this is the possibility, if a smaller company goes broke, it sort of says that you're better off dealing with the big guys like NAB Trade and CommSec, because they're not going to go broke as easy as these guys.
Well, that's true. I mean, the ASX does have some pretty tough capital requirements. And look, BBY, as I understand it, was the clearer in the options business that also required us clients to put up the least margin. So what normally happens if you want to trade options is you have to put up a margin, essentially a security up to your broker, and the broker lodges that with the clearinghouse. I understand that BBY had the lowest level there, so that's one of the issues. I wonder
why that was the case, Paul.
And maybe that was one of the reasons people were trading with it. But look, it is a lesson. In any financial transaction, the security of the counterparty you're dealing with is obviously important.
Yeah, without a doubt. Paul Rickard, Switzer Super Report, former CEO and chairman of CommSec. Is there anything he can't do? After the break, we'll see if the Greeks could ruin the stock market party we've been having since 2009.